the Toronto Star. I'm Saba Eitizaz, and this matters. We've all been swept under and left reeling by the effects of 2 years of this pandemic. But did you know that as the waves of the virus ebbed and flowed, there were many Canadians who were drowning in debt? You don't have to look far to see those who experienced terrible financial hardship over the past 2 years. It could be you or someone you know, and not many people would know about it because with a cycle of debt comes a cycle of shame. We don't talk about money, but a recent report has painted a harsh picture just the same. The report, published by ACORN, a nonprofit organization advocating for moderate to low-income Canadians, has revealed that more and more people were forced to take out installment or payday loans during the pandemic, and many are trapped in a vicious cycle, paying off interest rates of up to 60%. How does this happen to someone? How do high-cost lenders operate? And shouldn't the government be doing something to prevent Canadians from falling through the cracks and into an inescapable financial trap? The Star's business reporter Christine Dobby joins me to explore these questions. Hi, Christine. Welcome to the podcast.
Hi, Saba. Thanks for having me.
It's good to have you. So let's start with the basics. Can you tell us what's a high-cost lender or a payday lender and what are their services? And also, is a payday loan different from an installment loan?
So there are two basic types of high-cost loans that we're talking about here. And the first one is installment loans. And those are usually for larger amounts. And we're talking about $1,500 and up, typically maybe $1,500 to $15,000. And so those loans are paid back over time in installments, hence the name installment loan. And the interest rates on those types of loans can be up to 60% per year. So that's a very high amount of interest, obviously, but that's the maximum amount of interest that lenders can charge according to the Criminal Code of Canada. Anything more than that is illegal. The other kind of loan that we're talking about when we talk about these types of alternative loans, high-cost loans, are payday loans. You've probably heard a lot about these. They're short-term, smaller loans, and they have extremely high annual interest rates. And there's actually an exception to the Criminal Code of Canada if provinces regulate payday loans. So in Ontario, for example, payday lenders can charge $15 in interest for every $100 over a 2-week period. So say you borrow $100 and you have to pay it back in 2 weeks, you have to pay $115.
Wow, what percentage of interest is that? My math is really bad.
Yeah. And so when you work that out over, $15 doesn't sound that bad, but when you work that out over the whole year and you annualize it, the interest rate is close to 400%.
Wow.
Yeah. And so the specific interest rates vary depending on the province, but that's sort of the example for Ontario.
And even when you talked about the installment loan, 60% interest is pretty high. And you're saying with a payday loan, there are actually loopholes, based on the provincial regulations for each area, right?
Yeah, that's right. So in the cases where the province has regulated them, the interest rates can be much, much higher.
So it seems that these loans can both be very accessible, but a way in which someone can very easily fall into a vicious debt cycle very quickly. And it's often been called a predatory system. Why is it called that?
So there are a number of reasons for that. And one of the first ones would be that these lenders are often found in very high proportions in low-income neighborhoods. The loans often also come with a lot of extra fees for insurance costs, commissions, charges for credit monitoring, a lot of additional charges that can really add up beyond the interest that we already talked about. And then to make the payments to pay these loans back, people often find themselves turning to other high interest loans to cover the costs. So it can really become a compounding problem. And you hear a lot about people saying this sort of a vicious cycle of debt that they find themselves in.
So people might end up borrowing more to pay back the borrowed money, right?
That's right. Yeah.
So we spoke about some of the caps which don't actually exist for payday loans, or they can be different per province. But are there any other regulations when it comes to this? Are vulnerable people protected in any way at all?
So during the pandemic, the Ontario government did put some additional restrictions on payday lenders. And most of the restrictions were geared to situations where people had defaulted on a loan. And so the government put some limits on how much additional interest lenders could charge for people in those situations. They also put some limits on what payday lenders could charge for bounced checks or other dishonored payments. So that was one protection that came in. It didn't necessarily apply to any lending that had happened before the pandemic. We've also seen municipalities looking at ways to try and address this. For example, the City of Toronto has recently looked at banning new payday loan outlets within a certain distance of social services offices, liquor stores, casinos, pawn shops, those kinds of places. This has been done in other municipalities as well. Toronto has also looked at putting in some limits on just ultimate limits on the number of payday loan outlets that are permitted to open in the city. So there are some efforts to try and restrain some of the activities.
And Christine, you mentioned in your report that the situation has gotten even worse as a result of the numbers of people who've had a really tough time financially during this pandemic. Tell us more about this recent report that's been released by ACORN, what ACORN does, and what stood out in this report for you.
So ACORN is an advocacy group that really advocates on behalf of low and moderate income Canadians. And they survey their members pretty regularly on cost of living issues. And so they surveyed their members who turned to high interest loans during the pandemic. And the report that they put together is based on the experiences of about, I think it's 113 people who did turn to high cost loans during the pandemic. So it's really a snapshot of what those people's experiences were like. You know, there's lots more people in the country who turn to loans like that, but this is a snapshot of a subsection of those people. So what ACORN found was that their members were turning more to installment loans, those larger loans that we talked about, than they had in the past, had before the pandemic. So 46% of the people who turned to high cost loans actually took out those larger loans during the pandemic. And I think that really speaks to the issue of people feeling a lot of financial pressures during the pandemic and needing to turn to somewhere for larger amounts to borrow.
Mm-hmm. And it also speaks to the demographic that might have been disproportionately impacted by the pandemic. So it's highlighting another equity aspect of this as well. And these might be people who are probably not going to be able to get a regular loan from a bank, correct?
Yeah, that's a major factor in why people turn to these kinds of loans is that they have poor credit ratings. So they're not typically eligible for traditional forms of lending, credit cards, lines of credits, other bank loans from the big traditional bank lenders.
We'll be right back.
To illustrate a little bit about, how somebody can get into something like this, I know you spoke to someone who chose a high-cost lender when money was needed at an urgent time. Can you share that story a little and give us a sense of this?
Sure. Yeah, I spoke with a woman named Laura who, before the pandemic, she was a dog walker and she did that to supplement her income. She receives ODSP. And so during the pandemic, people stayed home and she lost her work as a dog walker. People were home with their pets. And she was facing really urgent financial situation. Her children were abroad with their father and she needed to fly them home. So she had to take out a loan of $2,500 just before the pandemic to cover the cost of those flights back to Canada. And so because of the high interest rates on the loan that she took out, she said she'd have to spend about $6,000 to pay it off over 5 years. And so far, she's only managed to pay back about $500 of that amount.
So $6,000 on a loan of $2,500, right?
That's right. And this, goes to the cycle of debt that we were talking about earlier. She has also had to turn to payday loans to meet some of her monthly costs. So she really talked about that feeling of not being able to get out from under what she owed, basically.
Yeah, it seems like no matter how much you try to keep paying it off, you would still end up lagging behind considering the interest rates. Is there any sense of the numbers here of the debt that's been accrued by people who committed to these services?
Yeah, I mean, the ACORN survey, again, was more of a snapshot, really, but it did show that about 46% of the people surveyed had taken out larger loans. I did find some numbers from Easy Financial, which is a publicly traded company. They offer alternative credit, but they don't actually offer payday loans. But they're obviously very familiar with the market. And they said that in a recent report that 8.2 million Canadians have non-prime credit scores of less than 720. And so that means that many of those people cannot access credit from banks or traditional lenders. And to give you a sense of how much those Canadians have needed to borrow, Easy Financial estimates that they carry about $186 billion in credit balances.
Wow, that's a big number. Let's talk about some solutions here. I know that, ACORN has been releasing reports time and again. Did they offer any suggestions on rectifying this? Obviously, when we talk about it from an equity angle, there are wider long-term solutions as well. But for the immediate, is there anything that can be done?
Right. So ACORN has been calling for the federal government to actually cut the legal limit on interest rates on installment loans, the bigger loans we've been talking about. And they want to see the government cut that down to 30%. And as I said earlier, it's currently at 60%. They want to see the government take some other steps as well. They'd like the government to force mainstream banks to offer more low-cost borrowing options to people and also reduce the fees that people have to pay when they have insufficient funds to cover a transaction. It's often around $45. When you're talking about somebody who's, taking out a payday loan for $100 or $200, $45 is a huge amount. So that's a major thing that they've been calling for. And it really is important to note that they're not alone in this. Other groups have been calling for this for a long time as well. Democracy Watch is one of them that's really been critical of banks, the big banks, for example, leaving low-income neighborhoods. So there's no bank branches in a lot of low-income neighborhoods. So I think there really is a sense that the big banks themselves have a role to play in this as well.
So in terms of what the government is the government doing anything? Because I know that a year ago, the NDP also asked Ottawa to slash interest rates on payday loans. Then in December, Prime Minister Trudeau wrote a letter to Finance Minister Freeland to crack down on what he called predatory lenders by lowering the rate of interest. And now we have a new budget aimed at a post-pandemic economic recovery. So what's in there to deal with the situation? Or is there a sense that something is being done to deal with it?
Yeah, so people have been calling for this for a long time, and the government did indicate last year, in last year's federal budget, that this issue was on their radar, and they said that they would do a consultation on the issue of the criminal interest rates. And as you mentioned, the NDP has been calling for action on this point. It was in the mandate letter to Minister Freeland, and the government did tell me for this story that they're still committed to lowering the criminal rate of interest, and they said that they'd be releasing details on the consultation on the issue. They said that those details would come, quote, in due course. It was not mentioned in this year's federal budget, so we'll see if there's any movement in the near future.
So is there any advice that you have or any resources that you could point towards for anyone listening who might have found themselves in a situation like this? Because it's so hard for people to talk openly about these things as well.
Yeah, so I think it's worth noting that there can be a lot of scammers out there. When you start to talk about credit counseling services, there's a lot of opportunities for people to get taken advantage of. So the federal government does have some resources on credit counseling. It has some advice on steps you can take before you turn to high interest loans, other kind of alternatives you might explore before you go down that route, and also some advice on how to deal with debt collectors. The provincial government also has some information on how to check your credit score for free and some advice on your rights when you are dealing with debt collectors. So I would say that it's probably a good idea to start with government websites and follow the links that they have so that you know that you're dealing with reputable companies if you are looking for credit counseling or any kind of services like that.
We're going to post the links to those government websites on our page as well if anyone wants to look further. Thank you so much for your time and the insightful conversation, Christine.
Thanks so much, Saba.
I was talking to the Star's business reporter, Christine Dobby. That's it for today. Thanks so much for listening. I'm your host, Saba Eitizaz. We want to hear what stories matter to you. Please send us comments, questions, or ideas to thismatters@thestar.ca. Please consider supporting the journalism the Toronto Star newsroom does at thestar.com/subscribingmatters. And don't forget to subscribe to This Matters on Apple Podcasts, Spotify, or wherever you listen to your favorite podcasts. Let's talk soon.